Welcome back, focused learners, to today's market briefing. I'm absolutely thrilled to have you here for this explainer. Look, if you were watching the screens today, you might still be feeling a little winded, right? Or, frankly, maybe you're reaching for some assets. We saw some incredibly wild intraday swings, a genuine crude oil shock, and a fascinating, brutal tug of war between foreign sellers and domestic buyers. Today, we're going to break all of that down with absolute data accuracy. We'll cut right through the noise, look at exactly what the numbers are telling us, and give you the clear, structured insights you actually need to understand this market. All right, let's dive right in. Here's the roadmap for today's briefing. We'll cover 1. Market status and macro. 2. FII selling versus DII buying. 3. Top movers and Q1 earnings. 4. The market rumor mill. And finally, 5. Setup for tomorrow. Starting off with Section 1, Market status and macro. So today actually marked a 5th consecutive down day for the markets. But crucially, it was an orderly one that somehow, amazingly, managed to claw its way back from the absolute abyss. I mean, the market gave just about everyone a mild heart attack right out of the gate, didn't it? The Sensex took a massive, roughly 900-point intraday plunge, just falling out of the sky. But then, right as panic was really setting in, buyers confidently stepped in just under the 23,700 mark on the Nifty to save the day. So we end up with the Nifty closing down just 102.15 points at 23,767.45, and the Sensex closing at 76,059.77. It was a brutal open for sure, but a really impressively orderly recovery. So you're probably wondering, what caused the initial panic? Well, that brings us to this big number right here, 100. This is absolutely the market's master variable right now. For the first time since May, Brent crude has crossed the $100 a barrel threshold. And you know how this goes. Whenever crude hits triple digits, it sends immediate shockwaves right across the terminal boards. The main catalyst behind this triple-digit crude is pure geopolitics. Houthi forces struck 2 Saudi oil tankers in the Red Sea. Instantly, this revived those deep market fears about a West Asia or Strait-of-Hormuz supply shock. And the impact of this is incredibly direct. Triple-digit crude immediately hits oil marketing companies, the OMCs. It hammers aviation stocks like Indigo, and it weakens the rupee. But on the flip side, it acts as a massive tailwind for upstream oil companies like ONGC and Oil India, who suddenly see their realizations jump. Definitely keep that in mind because it's going to be super crucial for our setup later on. Moving on to Section 2, FII selling versus DII buying. While the macro environment was throwing curveballs all day, the institutional flows painted a picture of 2 completely different realities happening behind the scenes. We're looking at a 5th straight day of outflows from foreign institutional investors who dumped 3,893 crores in cash today. Yikes. But our domestic institutional investors, the DIIs, they stepped up with a record buying figure of 5,454 crore. Honestly, these domestic institutional buyers probably need physical therapy after today because they are literally carrying the entire index on their backs. The domestic bid is doing all the heavy lifting right now. Without that massive 5,454 crore absorption, I guarantee you the index would be materially, significantly lower. Let's look at Section 3, Top Movers and Q1 Earnings. With crude spiking and DIIs frantically buying the dip, IT put in a broad defensive bounce today. KPI Technologies led the pack, up 5.9%, driven by heavy demand for their auto enterprise software, plus they had a nice rupee tailwind. Tata Elxsi and Persistent, they rode that exact same defensive rotation as the broader cyclicals were getting sold off. Now, on the flip side, we see power Capex high flyers, names like GE Vernova T&D, giving back their gains as risk-off sentiment hits the priciest cyclicals. Swiggy also burned today, closing down 3.9% on persistent quick commerce competition worries. I do want to highlight one highly specific defensive rotation today. Godfrey Phillips closed up 4.1%. Now, it's wonderfully ironic, but it really is a tale as old as time in finance, right? When a geopolitical crude oil shock induces market panic, where do investors hide? They hide out in classic defensive staples like tobacco. These fast-moving consumer goods and strong cash flow names become the ultimate safe haven when the macro picture gets messy. Beyond the macro stuff, Q1 earnings remained a major single-stock engine today. Shriram Finance posted a phenomenal, super clean print for an NBFC, with consolidated profit after tax up 59.9%. Bank of Baroda's headline, well, it looks terrifying at first glance, with PAT down 71.8%. But hold on, don't panic on that one. That is just a base effect from a large one-off last year. Their net interest income actually grew 9.5%, so the underlying operating reality is very solid. Tata Consumer, they delivered a nice solid 28% profit bump. But the day's marquee loser was definitely Motilal Oswal. Despite strong revenue growth of 25%, the stock got absolutely punished, dropping 7.3%. Why? Simply because their operational earnings margins, the EBITDA, compressed down to 57.5% from 62.8%, and the market simply won't tolerate that kind of compression on a rich valuation. No way. Section 4, the market rumor mill. Let's talk about the scuttlebutt. Now, I always like to remind you guys, today's tape was overwhelmingly driven by hard Q1 results and that crude oil spike. But it's always worth knowing what the whispers are on the street. First up, Vodafone Idea is seeing recurring chatter about government relief regarding their adjusted gross revenue dues. Personally, I'd rate the probability of immediate concrete news as low to medium. I mean, this talk surfaces around pretty much every cash flow deadline. However, if it is true, it would absolutely trigger a sharp 10 to 20% short squeeze. Second, Data Patterns is seeing buzz about a large defense order linked to Hindustan Aeronautics. Again, I'm calling this low to medium probability. Defense order flow is very real, but until we actually see an exchange filing, it's just talk. The big takeaway here, I advise extreme caution. Trade the hard data, folks, not the whispers. And finally, Section 5, set up for tomorrow. So what does this all mean? Where exactly do we go from here? The board is completely set. We have massive domestic buying fighting against aggressive foreign selling, all layered with a geopolitical oil shock. Let's look at what the options data is telling us ahead of the critical July 28th weekly expiry. For that July 20th expiry, Nifty's max pain, which is the price level where option buyers lose the most money, is sitting right around 23,900. Remember, spot is currently at 23,767. If we see a fifth down day oversold bounce tomorrow, the market is going to gravitate heavily toward that 23,900 max pain magnet. Now on the upside, massive resistance sits at the 25,000 call open interest, where sellers are heavily positioned. For Bank Nifty, max pain is at 57,200, with stiff resistance up at 58,000. So these are the key levels you absolutely need mapped on your screens for the open tomorrow. All right, for a specific high-value idea in focus based on today's data, consider going long on ONGC. This is arguably the absolute cleanest expression of the day's dominant variable. With Brent crude sitting above $100, it directly lifts upstream realizations for ONGC. The catalyst right here is crude staying bid on that Red Sea risk. But actually, let me give a very sharp warning here. You must manage your risk on this one. A rapid OPEC plus supply response or a fast geopolitical de-escalation is the biggest two-way risk to this trade. Things can turn on a dime. Which brings us to our mandatory reminder. This explainer is personal research for educational purposes only and is absolutely not investment advice. You always got to do your own homework before hitting that buy or sell button. I'm going to leave you with this final provocative thought to chew on tonight. We know DII's bought a record 5,454 core today to essentially save the market. But will that massive domestic bid actually keep holding the line against $100 crude tomorrow? Or will a sixth consecutive day of FII selling finally break the dam? Stay focused out there, keep watching the data, and I'll see you at the next briefing.